All Bitcoin needs to do to get to $1.3 million within the next decade is take roughly 25% of the gold market.
We talked about a few months ago, the $200,000 Bitcoin call. So we want to know, was Matt wrong with his call?
I think we have new all-time highs ahead of us before the close of the year. I think we'll make a run. Is it 20 million? Is it 30 million? Is it 10 million? Who cares? It's either worth zero or it's worth $1 billion. There's sort of two things going on that I see when I look at the gold price today. One, I definitely see
Mr. Matt Hougan, thank you so much for joining us here again today. We had a wonderful chat a few months ago. A lot of people really enjoyed our chat, and we were just talking offline. I think it's a great place to start about just kind of the shaping, the new world order. Obviously, the Ray Dalio video he did a few years ago is massive. The changing world order, and obviously the hard commodities and currencies are playing a massive role in the world today, whether it's BRICS, China, Russia. We talked about this a few months ago, and this is, Bitcoin, this crypto sphere, everything is really coming in. It seems like it's bifurcating. Like you have the hard metals in the East, and then you have the West looks digital. And that's almost the fight. Maybe it's not a physical kinetic war. Maybe it's that is the war, right? So I would love for you to start unpacking where we are. And we're going to talk about as well. We had the 200 call that we talked about a few months ago, the $200,000 Bitcoin call. So we want to know, was Matt wrong with his call? So we're going to get into that as well. But first, I would love what your thoughts are on this chart I got from Dr. Jeff Ross and Preston and Piss's podcast. So where are we at, Matt? What's going on here?
Yeah, I mean, we're at a fascinating part when you look at something like the performance of hard metals or gold or Bitcoin over recent time periods. They're screaming to you that something is going on in the economy. I think what people may be missing, and you hinted at this with your gold in the East, digital in the West, is there's sort of two things going on that I see when I look at the gold price today. One, I definitely see broad-based debasement across all asset classes being reflected in hard assets generally. So, we're seeing sky-high PE ratios, we're seeing home price increases, we're seeing federal debt going to record levels, and I think that is a key factor in why gold is above $400,000 and why Bitcoin is at 115. And to premise or to hint towards your next question, I still think is going substantially higher. So I do think that broad-based debasement trade is in place. The other piece that's in place, we're just seeing a hard twist, a hard shift from central banks around the world out of US Treasuries and into gold. And I don't think you can ignore the fact that that is happening too. So I think you have two things impacting gold, one thing impacting Bitcoin. But broadly speaking, as this chart shows, there just has been a lot of debasement of assets against those hard metals. And I think that's a huge defining trend of what's going on in the economy right now.
Do you think that it is, I know we're trying to reshore things, we're trying to bring things back over here. What are your just thoughts on that in general, I guess? Because obviously, commodities, the gold, the silvers, copper, all these things are going to play a big role if we really are going to do that. I mean, what do you see from your perch? And the average person watching doesn't have the contacts or to maybe talk to the people that you get to talk to on a daily, weekly, monthly basis. What are you seeing just in that world when it comes to what's the feasibility even of them trying to just our country, I guess? And because this is beyond the current administration. This is a 5, 10, 20-year play that you're trying to reshore things. So what does it look like from your perspective of how this might unfold?
Yeah, I think that's a great question. I mean, I'm not a full expert in this space, so this is somewhat armchair quarterbacking, but I know some, and as you said, I'm pretty well connected. I think the mistake I see most people making is they imagine it's binary. You're either all offshoring your manufacturing and resource extraction, or you're all onshoring it. That's certainly the way it's portrayed in the media. I think the right way to understanding what's going on is that the pendulum swung to one side of that spectrum, strongly global trade, strongly offshoring, and it's swinging somewhat back. I don't think it will get all the way back. But I do think it will get some of the way back. And I think acknowledging that that this is the direction of travel informs what's going to happen. What is going to happen? I think long term, it's probably means prices go up. I think long term, it means strategic resource get developed in different areas of the market. I think long term, it probably actually ends up pushing us more towards universal monetary standards like gold and Bitcoin. But I do think it's a shift in degree more than it's a binary shift. And I think if you think about that, it makes you realize that it is going to happen to some degree. This onshoring is going to happen. This nationalization is going to happen, but it's happening, on a degree based. It's not all or one.
Yeah, I couldn't agree more. I think it feels like it's along with the lines of, again, just a form of currency war, right? There, I guess it's trade wars. So it's trade wars, currency wars, all this kind of pushing and pulling, and that's what I feel like. We're in this global world where we're not in tribes anymore. We're like, I'm in my tents over here, and you're physically 20 miles away, and like you're warring in that sense anymore, right? We've kind of progressed as humanity just over time, where that we're all globally connected. So there is a sense of mutually assured destruction, right? Where in this is probably why things haven't happened for a long time. A lot, maybe a lot of global war in that sense, because we are so connected. So I think that is something to just keep in mind as well. Like you're gonna have these pushes and pulls and these flows, like you're talking about, like kind of this, whether it's a binary or not. So I think that's fascinating.
Yeah, and I would add, from our perspective on a Bitcoin and monetary basis, what it means for the U.S. dollar is that there's going to be an endemic force that wants the dollar to be weaker, which hasn't been true for most of this chart. It's been a dollar strengthening economy for the past 20 plus years, and now for political reasons, for some of those geopolitical reasons that you were mentioning, there is going to be a force to weaken the dollar against global currencies. The challenge is that other countries are trying to do the same thing. And that's where you get that downward spiral in currency, where they all want to be more competitive than each other when they're exporting. And I do think that's going to be a challenge that actually does play into the hands of Bitcoin and crypto.
What is your sense of why people seem to have I don't want to call it a hard time. I mean, I'm trying to think, like, when I guess I know not everyone is looking at this chart or has access to it necessarily, or is looking for it, but it does feel like the average person gets caught up in the sense of kind of like day-to-day news cycles maybe, or politics or whatever it is. But when you zoom out, it feels like, and again, granted, we spend our time in this space looking at things like this, but when you zoom out, again, we were talking about this clearing out on this chart, where it seemingly has to clear itself out. It has to come back down to undervalued in the stock or paper world, and it's going to be hard assets that are going to be overvalued at some point. So, when you zoom out, it seems so easy, but why is it that the average person, in your view, or your why do they have such a hard time, I guess, seeing that and getting caught up in the day to day?
Yeah, I actually wrote about this a while ago. There's this author named David Foster Wallace. You'll forgive my delve of here, and he tells this parable about two fish, and he says this older fish and a younger fish are swimming along, and the older fish says to the younger fish, "How's the water?" And the younger fish says, "What's water?"
Yeah.
And the point of the parable is, when you're surrounded by something your whole life, you don't realize that it's even there. I think the reason that ties into what you've said is we've lived in a fiat only economy since we went off the gold standard in the 70s. No one remembers that there was this other version of what could happen. And so, like, the fiat world is sort of water in this analogy. I think what the world is waking up to is that there's a broader context in which assets aren't self-referentially valued, but valued against other things, and they're being revalued against those other things. And I think we're sort of opening up to that world today. So I think that's why people have a hard time reflecting back onto a non-fiat standard, because for 50 plus years, it's been the dollar that's been the measuring stick. And we're in a transition away from that. But no one working professionally remembers when the dollar wasn't the measuring stick. And so changing the measuring stick is a big deal. I'm not saying it's like, game over, we're reverting away from it, but we're starting to see more different types of measuring sticks. And I think that's why many people don't associate with this, because they haven't They haven't lived, none of us have lived that experience over the last 50 years. I think it's a big shift.
The world is changing. Privacy, sovereignty, and freedom are no longer optional. They are essential. If you are still holding your Bitcoin on an exchange, you are vulnerable to your Bitcoin being frozen or the Bitcoin not even being there. In a world of broken trust, a fallen world, we need to be able to know through code, through math, that we have the keys to our wealth. We don't need to trust some third party. We don't need to trust some government. We don't need to trust some ruler on high that they're going to have our wealth and not censor it from us. Just ask European Union how that's going right now. And that's why at Foundation, they're building Bitcoin tools that are open source, privacy first, and actually simple to use. It's the only kind of Bitcoin crypto tools you should be using. The Passport Core is a Bitcoin-only hardware wallet, probably made in the USA. The only one that I know of, fully air-gapped, no Wi-Fi or Bluetooth to compromise your keys, with a large screen, seamless QR workflows, and encrypted micro SD backups. It is here for the average person or the advanced cryptographer as well. Along with your purchase, you get the attachments, the USB-C cord, the iOS and Android attachments, micro SD card, and the USB-C cable. You don't have to go searching around for everything. You also get the free Envoy mobile app as well. You can buy Bitcoin straight into your self-custody. It helps you set up your Passport Core, label and track your coins, manage your keys, and do so much more. Foundation built the core and their company for sovereignty and freedom for all of humanity. You can take back control of your money and your digital life now. Get started today at foundation.xyz/Brandon, foundation.xyz/BRANDON, or check the link in the description. Yeah, it's funny. You said that way more beautifully. For whatever reason, the last couple of months, I've been saying that a lot. Just all I've been saying is, how does a fish know he's wet if he's been in the water his whole life? And so I love the.
I love it.
Yeah,
Exactly right. But you look at like central bank reserves for the last 30 years, U.S. Treasuries have been the primary reserve of central banks. That just shifted to gold 2 months ago, right? But those 30 years were the only 30 years in history where that was true. Like that was the water experience. It just happens to be the last 30 years. But the other hundreds of years on either direction, backwards and I think forwards, that's not the case. It's actually gold and other standards. So I do think we're sort of evolving in that direction.
Yeah, that's such a great point. And again, I've even since 1913, right, 112 years ago, since the Fed. Again, I've always said to people too, like there's no one alive, really practically speaking, that even knows what a world without that inflationary, just printing and just we're trying to paper over things in general. So, and like you said, I think that what really people should be able to see the pointing here, like something broke in 1980 or 1971, we'll call it, but then you have this world where it feels like, and I would love your thought on this, and then we'll kind of somewhat move past this a little bit, but it started going where you had to start papering over this, and then it brutally broke it seemingly in 08. And that's why, at least in my opinion, you have this world where they had to paper even faster. Like I think what was our debt, like 5 trillion or 6 or 7 trillion, like back in 06, and now it's 38 trillion. I mean, to me, it just, that's all it shows, where it's like, hey, we know it can't come down and be revalued down here, guys, because it's based on nothing anymore. So now it's like you just have to keep papering over it, and we're trying to spin it up again, and it's just like the car's like trying to start, and it's just like having a tough time. It's like negative 10 degrees out, and it's just like, yeah. I don't want to turn over. So
it's hard. Every subsequent dose has to be bigger. I mean, that's what we learned, right? Even the sort of post-COVID stimuluses were orders of magnitude bigger than the financial crisis. And I would argue that the liquidity crunch in the financial crisis was more fundamental than it was even in the COVID response. So you're seeing we have to do more and more just to tread water. Yeah, eventually I do think it breaks. And as you said, country's been around for 250 years. Half the debt's been built in the last 10 years. Those are scary stats.
Yeah, it's part of it too is you feel like, again, this is where I go with like the zoom out thing. We talked about the summer of accumulation, right? Like you've talked about that a lot over the last 6 months. Hopefully people are stacking sats and loading up, because this is the world we're entering, where again you zoom out and you see that they're in the reason that I think, Matt, you probably say, I don't want to put words in your mouth, so you can correct me if I'm wrong, but I say it, I think a lot of people out there that in that hard money camp will say, the sound money camp really is that we're in the exponential debt phase, and that's why that, therefore these things will naturally have to go up in at least a nominal price or probably in value as well, like Bitcoin or whatever it is, because they have to keep printing. So, I mean, I would imagine you share that sentiment. It's really based off of, hey, they have to keep printing more exponentially. That's why the price of these other assets, hard assets, will go up.
I mean, it's not just me and you. It's Ray Dalio and others. It's unfortunately the math points in that direction, and there's just no sign of it reversing. And the question is, when does it really start to matter? But I think if you're looking at the price of Bitcoin over the last 10 years, or looking at the price of gold over the last 4 years, it's hard to escape the idea that it's starting to really matter. And the question is, how fast does that cycle and compound? I think it will be pretty fast. But I think both of those, as our silver, as our base metals, as indeed our equity valuations and other things, are sort of screaming all the same thing in unison. That underneath this is that measuring stick losing value against assets in significant ways.
You had just talked to, and I mentioned that you were, just on another pod recently, Milk Road, and and then you had a post about it again, just talking about your latest report, Bitwise's latest report. And again, I mentioned this similar of accumulation, and we're in this accumulation phase where again these prices are down, so it's time to continue stacking. And we've talked about the $200,000 call before the end of the year, and there's still a couple months left. So it's anybody's guess. Where are your thoughts right now? We joked about, did Matt get it wrong, or people got it wrong? There's been calls all over the place. There's been, the Peter Schiff say it's going to 20,000. Dr. Jeff said, 475. I mean, there's, Samson Mouse said, hey, we're going to 1 million. I mean, there's been a litany of calls on what's going to actually happen. And that's the beauty of it, is, as we can see, no one knows. All we can do is, take what we have in front of us and give our best guess, educated guess. So what are you seeing right now? We have, prices are flat. I think Bitcoin's the same price as like when Trump got inaugurated pretty much right now. So people are in this weird malaise right now. Like, what are you guys seeing just from a top down, 100,000 foot view?
Yeah, I mean, what we're seeing is continued demand. So the audience we serve, primarily professional investors, financial advisors, family offices, et cetera, institutions, sovereign wealth funds, there is persistent buying. And you see that in ETFs, Bitcoin ETFs, despite the pullback, despite the rocky October we've had, have still pulled in about $4.3 billion. It could still be a record month for ETF inflows this year, the best month ever if we get a strong uptick in the last week or so. So I think the institutional bid for crypto is just persistent and not going away. That's what I hear in my meetings. That's what we see in the flows in our funds. That's what we see in the flow in our competitors' funds. And that to me is the overwhelming story. Institutions wanting exposure. The question is, why hasn't the price reacted to that more? And I think that's a reasonable question to ask. My gut tells me I will say we haven't revised our price forecast. Mm-hmm. So we haven't changed from saying we think it could still get to 200K. Obviously, that would be an extraordinarily move. And even I think maybe it won't fully get there, but I think it's going to move directionally in that way because all the trends that would drive it there are in place. Regulation is still positive. Institutional demand is still positive. I think there is just this wall of existing holders who have been willing to sell and have kept the price down. But I think we'll close the year. I think we have new all-time highs ahead of us before the close of the year. I think we'll make a run up towards 150 and then possibly beyond. And again, we haven't revised the $200,000 target because I still think there's a world where that's possible. Maybe it's not the base case, but I certainly think it's possible. We can see end of year melt ups. We've seen them before. I think we could see them again.
Yeah. I mean, we've had multiple, last couple months of the year. I think in these parts of the cycle, 10X moves, it's happened multiple times. And that's where, it's not to say it again, but it's only a 2X or less than a 2X from here would be a $200,000. So I think that sometimes we again, zooming out, we've said this multiple times already, zooming out. Are you seeing a rotation out of, maybe some of like the whales, some of the bigger holders moving into the treasury companies? Is that why maybe there's some more of this selling than normal? I mean, what are you seeing on that end?
Yeah, I think we've seen a few things. So one is you've seen long-term holders sell assets. That's just objectively true in the data. Mm. And I think that still anchors around the $100,000 price mark, which as a reminder, if you look at sort of platforms like River and others, their two primary limit orders are at 100K-ish and $1 million. So I think those are two significant sell walls where existing holders are willing to sell. And I think the primary thing is it's just taken longer than we've expected to work through that. I do think there's been some rotation into digital asset treasuries. I think there's been some rotation into ETH and Solana and other smaller assets. But mostly, I just think that it's the $100,000 price target is probably the most important price level since we crossed $100. And so it's taking some time to work through the gravity of that price and release to the upside. I continue to think at some point, if we wear through the sell wall in and around 100K and get release, I think there's an air pocket up above. I think we could run up relatively quickly, but I've been surprised at how long it would take. I would share one note from gold, which I think I talked about a little bit on the Milk Road podcast. Everyone's saying gold is ripping. It's gone from $3,000 to $4,000 based on central bank buying. And that is true. But the other piece that is true is the central bank started buying in 2022 when the US seized Russia's assets. You saw central bank purchases double that year, and then they've stayed the same for 2022, 2023, 2024, and 2025. The interesting thing about that is it's only in 2025 that the price has really skyrocketed. And so I think what that tells you is that central bank demand had to wear through people who were willing to sell at lower levels before it exhausted that supply and the price took off. I think that may be a lesson for Bitcoin if we continue to see these flows into ETFs. Eventually, we'll wear through that supply. But yeah, we haven't yet. But as I said, we're not revising our target yet.
Yeah, no, I love that. Nor should you. I think that again, like we said, we kind of primed the first, whatever it was, 10, 15 minutes with, again, this is the setups there. You zoom out and it seems very, very clearly obvious. If Bitcoin stays decentralized and secure, then these things therefore are inevitable, basically. And that's why I think we have the confidence to say stuff like that, and you have the confidence to say that. So it's not for nothing. It's not just because someone's like, what's going on in the world today, I'm just going to make some guess or something, right? Like I think it's very important to restate that there's a reason. The properties of Bitcoin and the network itself, security of the network, is why Matt can say, yeah, it's not happened yet, but it will. So very fascinating. What are your thoughts on the Bitcoin, the strategic reserve? What's going on there? I mean, again, this is part of like the madness of the last 9 months and people, this run up. Trump got elected, a little over a year, or about a year ago, and you have a lot of fervor. Prices doubled since then. It's up 100% basically in this past year. But again, part of this malaise and people just got, sideways price action, stuff like that. And the reserve, it feels like it's all but forgotten, pretty much at this point. Like they were focusing on stablecoin stuff and all this stuff. I would love for you to unpack a little bit of what you are seeing and your thoughts on stablecoin legislation, the Bitcoin strategic reserve, like kind of where you hear everything at.
Yeah, well, I think the right place to answer that is what I think a lot about are things that are mispriced from my view in the market. So it doesn't actually matter if everyone expects us to get a Bitcoin strategic reserve if we get one, because it's already priced into the market. When I look at crypto, what matters is if something is priced wrong and then it happens, then that's an upside shock that increases prices. When I look at the crypto market today, there are two things that stand out to me that I think the market has wrong. The first is that it's pessimism over the Clarity Act, I think, which is the next piece of legislation in Congress. I think it's misassessed the likelihood of that probability. I'm looking at Polymarket right now. It's saying there's a 28% chance of the Clarity Act being signed into law this year. Now, with the government shutdown, that definitely complicates matter. But absent the shutdown, I think the probability is higher than that. What our reporting and people in Washington tell us is that the conversations are fairly productive, even between Republicans and Democrats, and that there is a pathway to move that forward if the government reopens. So I think that is a potential catalyst for the end of the year. The other one is the one you raised, which is I think the market's expectation is the Bitcoin strategic reserve has basically a 0% chance. And I think that is just wrong. I think it has a very high chance of coming into form with the existing seized Bitcoin, which just expanded recently with the additional seizure we saw. And then I think there's a non-zero chance that sometime in the next year or two, we move forward with actually acquiring Bitcoin for that. I don't think it's the majority chance, but I think it's a non-zero chance. And so as an additional catalyst for the market, I think refactoring around those. Look, since the Trump administration came in, crypto has been disappointed with the speed time and again, but they have delivered on their regulatory and other promises to crypto. And I suspect that both of these things will happen. And I think the market probably has them mismeasured right now.
For those, again, we get a fair amount of people across the spectrum watching this show. So for those, I would love for you to just explain a little bit of the Clarity Act, just so people that might not understand it can grok it a little bit, just because I think it's, and again, I'll throw a little bit of my 2 sats in there as well, and you can kind of take both those things and give your thoughts. But to me, it looks like a lot of the kind of the stablecoin stuff is, hey, how can the United States government, since we don't have a lot of buying of treasuries across the world right now, like you said, you mentioned 2022, we're freezing the Russian assets, we're doing all these things. So now people are looking at us like, whoa, we're losing trust around the world slowly but surely. So is it a way to get treasuries out into just the regular person's hands? Is it a way to kind of just, hey, now we've democratized it in a way, now everyone can be in on the game and get it out to 8 billion people theoretically? So if you could, your thoughts on that, but also kind of just explain it just for a second so the average person knows.
Yeah, 100%. So there are 2 bills. There's the Genius Act, which passed, and the Clarity Act. The Genius Act covers stablecoins, and you're right to point out this treasury purchasing, because what the act showed was that every stablecoin, the act said, every stablecoin must be backed 1-for-1 for U.S. treasuries. And so the idea behind that bill is to provide a firm regulatory footing where people can trust stablecoins as digital representations of dollars backed by U.S. treasuries. And then, as you mentioned, those digital dollars can be used everywhere around the world. They can be used by crypto traders, sure, but they can also be used by people in Argentina who want to hold money in dollars instead of local pesos, or from people in various countries in sub-Saharan Africa who wants to transact business to business in dollars instead of in local currencies, which are expensive and eroding in value. And it's beneficial for the US Treasury because every stablecoin that gets issued has to buy debt on the back end of that. So I think you're going to see the government fully force behind stablecoin growth. The Clarity Act is the second piece of legislation. It provides broader regulatory clarity for crypto. The reality is today, crypto assets like Bitcoin, Ethereum, Solana, etc., there isn't clarity on whether they're regulated by the SEC or the CFTC, which are the 2 major regulatory arms in the US. You just don't know, which sounds incredible to an outsider, but you just don't know who regulates them. And as a result, there's a lot of confusion. As a result, big firms aren't willing to build on them. Wall Street is not willing to embrace them because they don't know how they're regulated. The Clarity Act, as the name suggests, provides clarity on how crypto assets would be regulated. I think it would mean that crypto assets would stand side by side with other forms of finance in financial assets in the mainstream economy. And so it's an important next step. When you layer those 2 on, what you're getting is crypto moving more into the mainstream, Wall Street building on crypto being spread around the world by US financial institutions, and it's generally positive for the market.
And that's exactly why I had you clarify those things, because look, even in my own head, I was thinking Genius Act, and yes. So
so easy to get them, upside, but they're 2 parts of a half, right? You sort of need both to get the full expansion of the clarity. The Genius Act, look at me, I'm even stumbling over them. The Genius Act is fine in terms
Washington
of
does that to you.
getting stablecoins out there. But you need the Clarity Act in order to have them interact with DeFi and interact with sort of crypto chain rails. But when you put them together, if we get them, it'll be a big win for the industry.
Yes. Speaking of that, I guess this kind of leads me into one follow-up, but then the next one will segue. Is that part of why you see or think there will be a bump, 200 still in play by end of the year, stuff like that? Because if this does get going, obviously, then yes, that clarity will spur people on that kind of just been sitting there for years, kind of like, yeah, I don't know what else to do.
Yeah, that is exactly right. I think when I think of catalysts for the end of the year, I think a broad rally in risk assets, which we're seeing, I think would be positive for crypto. I think passage of the Clarity Act could be a major spur for crypto adoption. And then I think there's just some end of year seasonality that adds together. If we get all of those three things working together, I do think we could have a significantly strong November, December into the end year.
Everything you are learning in this episode is completely moot and does not matter if you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party. This is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. What do we have here? 12-word seed plate. After a long wait and everything being sold out, this is now here, the 12-word seed plate. For those who have been asking, store your generational wealth in titanium forever. Do not make the mistake of storing it on paper. This can withstand fire, nuclear fallout, wind. We've driven over it. We shot hockey pucks at it. We've checked it. We've thrown it. We've done everything possible. Do not pass down your generational wealth on paper. Put it in titanium. Go to stampseed.com. Put in code Brandon, BRANDON, for 15% off store-wide. Do not be a statistic. Show your family how much you love them. Store your generational wealth forever in titanium. Code Brandon, 15% off store-wide. And so again, since we're talking in November, December, stuff like that, and this is generally when it happens a lot of times, and people equated it, I think, for a long time. Obviously, the Bitcoin, the asset was, or the protocol was much smaller, just the user base of Bitcoin. So things were more volatile. The price would move more, I guess, just so the average person understands why things seem to be really volatile, say 5 years ago or 10 years ago. But where is retail? Where, $2.5 trillion, for Bitcoin itself is it's small market cap, but it's also big at the same time, right? Like we're kind of in this weird middle ground, it feels like. But, a lot of people are like, oh, retail's never going to come back. And, we're getting to Christmas and Thanksgiving time where people generally these run-ups happen, or everyone attributes it to like, well, people are talking about it at the dinner table. Where is it going to be a black swan event that like forces everyone back to like, hey, we need to sound money? Like it feels like retail is just completely gone. And that's kind of what we talked about earlier a little bit, in a way of like, when you zoom out, it seems very obvious, but it seems like people are either there's just not enough money that people have in their bank account, which is, one aspect of it. But then also people are just like, hey, we're going to find penny stocks again, or we're going to find whatever, meme coins, or who knows what, right? So where do you kind of see this all coming together with retail and what's happening?
Yeah, I don't think that's wrong. I think a lot of retail has migrated off to even more volatile assets. Mm-hmm. Certainly, they've been chasing the AI story. They're certainly chasing meme stocks as opposed to meme coins, so very much alive in the market. And Bitcoin has been less volatile than the Mag 7 of late, right? It actually hasn't been volatile enough. I continue to think the next major bid is professional money moving into crypto. And I don't know when retail will come back in the sort of force it used to. I suspect you won't see a retail-led Bitcoin rally in the future. I think you'll see professional money driving the Bitcoin rally. What that means, for what it's worth, is we're more likely to get sort of a grindy up than a parabolic up, which is what you see. Retail money is faster moving than professional money. Professional money sort of levers in over time. And that leads to what we've seen, which is like a slow progression upwards. Yeah, I don't know. I think crypto, it's mature enough that maybe, at least for Bitcoin, retail is broadly in or not in. And the next phase shift is really this professional money showing up.
Is that, I guess, would that be the power law theory type of thing? I know Giovanni's talked about that for a number of years. Okay, so I'm trying to think. Like, is it the demographic shift? I feel like it feels like to me. Okay, first off, where do you know how much can retail even make it pop again? Do you know off the top of your head, what we're looking at even for retail, what people might have available? I don't know, again, if it'd be a liquid cash or cash available or, money market account type of stuff, or maybe, people have to sell
Yeah.
assets to jump in. Do you have any type of, inkling of?
It's a great question. Yeah, there's a huge amount of money in money market funds. So it's worth noting that something like $7 trillion. So there's plenty of firepower in money market funds that could move in and lift this market. The thing that makes it different maybe from versions past is that money tends to be owned by wealthier, older investors, right? There is a skew of the distribution of money market funds versus sort of retail checking accounts, sort of stimmy-led retail purchases. And I do think I don't have a good way of gauging how much cash there is left in that system. But if you look at various economic indicators, there's a fair amount of stress in the lower end of the retail side of our economy right now. There are high auto default rates. There's high credit card levels. So there may be some distress there. There's a huge amount of retail money evidenced by money market funds that's on the sidelines waiting for an asset exposure to come in. And I do think it will come in. One thing to think about is as interest rates come down over time, holding those money market funds becomes less attractive, and that can force that money into other assets. So I think we could see an element of that if we see an interest rate decline in the next handful of months.
So I wrote down like 3 different questions while you were speaking right there that kind of spurred off of that. What the first one, I think maybe it will be easiest since you just mentioned it. Where do you think rates go? Because we were showing this chart earlier, obviously, that we've been looking at for years. And then in saying that, I thought, what was this? It was 2 or 3 years ago. I can't remember now when the rates, when the rates spiked up and we're the most aggressive rate climb we've seen, at least in modern times. And I know me and a lot of people, it was just like, well, this can't last very long. I mean, maybe 6 months, a month or a year and most. And then here we are like a couple of years later and we're still just chugging along. I mean, it's mind blowing to me. I mean, where do you think, and everyone, it's always like, well, we can't we talked about the 38 trillion in debt already. You can't, refinance all this debt with 5% interest rates or 4% or 7% or whatever. Where do you see rates going? I mean, like, it just feels like we're Wile E. Coyote and the Roadrunner. It's like we ran off the cliff and we're just like, we haven't looked down yet. Nothing makes sense. I think
it's a good analogy. I mean, my honest sense, I don't know if it makes sense or not for the economy, but my honest sense is I think rates are going to go substantially lower over the next year. The reason for that is, Trump is remaking the Fed in his image. He objectively wants lower rates. You may think that's a good idea. You may think it's a bad idea. You may think politics should stay out of the Fed. You may think the Fed should be responsive to the executive. It doesn't matter. What matters is that that's what's happening, and that they're putting Stephen Miller on the Fed and they're reconsidering the Fed governorship. And Trump is very active about saying he wants substantially lower interest rates. And so I think I would expect that to happen. Again, it doesn't matter if you want it to happen or not. But I do think that's what's going to happen over the next years. Those interest rates are going to come substantially down. I think they're inclined to run the economy hotter than otherwise. We've seen those statements from the Fed about whether they're balancing inflation versus employment and emphasizing sort of the employment side of the spectrum. These are all signals that rates are going to come down and probably inflation is going to stay a lot closer to the 3% level and maybe above. And that's just stated CPI. That's not real.
That's just, jeez.
Completely.
That's wild.
But again, whether you want this to be true or not, I think every indication on the surface says it is going to be true. So the position in your portfolio, you should think about how should I position for that world where inflation is running hotter than maybe the market thinks and rates are lower than the market thinks and debt printing is still very high. That is the world that I sort of see in the statements we're seeing out of the administration, out of the Fed, out of various governors, et cetera.
It's just wild. I'm stunned that they've been able to kick the can for a few years like this with, elevated, 10-year, just everything, I guess, the Fed funds, the 10-year, everything just being, and then that's where it feels so backwards. And again, I know like there's exceptions to the rule. I mean, rules or records are meant to be broken. Maybe that's the best way to say it. But it's like whenever there's an inverted yield curve, we're going to have this, recession or crash, which I guess a lot of people argue like, well, we have had a recession or we are in a recession, yada, yada, yada. So I get that, but I just, man, it is wild they've been able to kick the can and just seemingly not a lot is broken other than, like you said, I mean, maybe just nothing's broken other than the bottom 40-50% of the country is just starting to really struggle. So if you don't care about that, then hey, nothing's broken and great.
Then it's totally fine. Yeah.
Yeah, that's totally fine. I mean, sure. In saying that, what kind of data, or what are you seeing just with the, it's somewhat off topic a little bit, but the auto loan defaults and just what's going on there? Do you have any kind of knowledge into that?
No, we don't have any special insights to that. I just see the same reporting as everyone else.
Yeah.
I'm seeing that, the early indicators of economic weakness for people at the bottom half of the spectrum, whether that's private loan defaults or credit card rates or credit card levels or automobile defaults, have been rising. Part of the automobile story, of course, is that car prices are up substantially. I think the average car is now $50,000, which is a big chunk for many people. Yeah. But you have to see that and think, there is some pain in a huge part of the economy, and I think that's just objectively true. I don't think that's a unique insight from my point.
So going back to one of us said the word demographics, a few minutes ago, but it feels like to me that's where we started kind of venturing down this path a little bit, and there, the 7 trillion in money market accounts, and it skews, older, obviously. It feels like to me that we're in this like 10 to 20 year window of this wealth transfer. Maybe the younger generation's needing, I mean, you already seen it in the last 5-10 years of, hey, I can't afford a house, so my mom and dad are co-signing with me, whatever is happening, that's a wealth transfer, in essence, or they're giving you money or whatever it is. They're that's the transfer of wealth before someone passes away, in essence. So there's a lot of that wealth, like you were saying, up top that's going to start coming down. And for me, it feels like we're 10 to 20 years where Bitcoin becomes very obvious. This digital world becomes very obvious, and it's just the way of life. But we're like in between these two worlds right now, where the money's up here, and that generation is like, well, hey, I'm good. I don't need all this stuff. And then the younger people are like, hey, we need. So is that kind of how you see it playing out? Just kind of like long term here?
I think it's a very strong long-term impact. And there's an analogy to that, which is the people running finance in America, by and large today didn't grow up natively with crypto. Mm-hmm. But in 10 years, that will be much less true. Yeah. As you know, Brandon, I come from an ETF background. ETFs were the disruptor to mutual funds. And I was in that industry for 20 years, and I saw it, which is when I first joined the industry, the people I worked with were 27 years old, and they were at junior positions at JP Morgan. And now they're running JP Morgan Asset Management. And that is just a demographic trend that takes over. The same thing is going to happen as well. The people who will be running Goldman Sachs in 10 years will be natively digital. And that just, and as you mentioned, the people controlling wealth will be natively digital. They'll be more open to crypto. They'll see it as an equal part of the financial ecosystem. So I do think that is a long-term demographic trend that is just inevitable. I mean, it's just literally inevitable, right?
Yeah, absolutely. I mean, and I think it just goes into, everyone, again, if you spend time in this world, it seems very obvious, and I think all of us have a hard time because the average person is living their life, doing their thing, especially in the Western world. They're like, hey, why are you bothering me? Like, shut your mouth about all this stuff. Like, it's okay. We're good. So it just takes time. I think that's the big thing. Everyone wants it now. Everyone wants the $1 million candle, whatever it is, $100,000 candle, right? Like everyone wants these things to happen because we're all human. We all, everyone with their varying degrees in the spectrum. But yeah, I think it's such a great point.
Totally.
Do you think that where are your thoughts on just the this cycle of the Bitcoin cycle? I mean, I know Raoul Pal is famous for the banana zone, right? There's so many different people, like we said, we mentioned Samson Mao and all these different people across the spectrum. Do you think that the 4-year cycle has broken? Do you think we're in a world where you could just have 5 years of green candles, like, we're just up every single year because of this environment we're entering, this macro, the Lynn Alden, nothing stops his train, like the fiscal dominance, like all these, like, how do you see this playing out going forward when it comes to, the cycle theory and all this stuff, which seems, I know American Hodl in this podcast we showed earlier, he capitulated. He said, I'm off the cycle theory. Like, I finally got off. Like, I think, so where do you stand in all this?
Yeah, I don't think the 4-year cycle will hold. I don't know if we'll get 10 straight years of green candles. That would be
Yeah.
great, but I don't think the 4-year cycle will hold. The reason for that is threefold. The first is one of the primary drivers, obviously, was the Bitcoin halving. That statistically becomes half as important every 4 years. So it's just a smaller force than it was when you and I got into crypto many years ago. It was just a much bigger deal. The second is the last two down wicks, 2018 and 2022, were during periods where they were aggressively raising interest rates. As you said, the highest, fastest interest rate increase in history. And if you look forward to 2026, I just don't expect that. I think we're going to see interest rates come down, as we just discussed. So I think that is moving in a different direction. And then the big thing is we just have this institutional capital that's going to move into crypto. I think it has to move into crypto. I think they can't stay at zero. And that's going to take 5 to 10 years. And so, if you look at the average month, there's like $4 or $5 billion of Bitcoin purchases by ETFs. I think that will continue forever. I mean, not quite forever, but for a very long time until these institutions establish their baseline position. And as a result, I think that's just going to overwhelm the 4-year cycle. Do I think there'll be down periods and maybe even down years? Of course. But right now, do I think 2026 will be an up year? I do, because this institutional capital, nothing stops that train. Nothing stops the debasement
Election year.
Train. And those are two powerful forces.
Yeah. It's in. Yeah. Again, like you said, you already outlined kind of the Trump angle too. And again, it is midterms. It's the election year type of thing where it just feels like, looks like, sounds like it's, trying to juice the skids for, to do, have the economy, ripping and roaring. So all signs point to that.
I agree. Yeah. Again, you don't, it's not whether you think it's right or think it's wrong.
Right. Yeah.
You think it is. And that is the direction of travel, from the Fed, from Treasury, et cetera. So I think that's what's going to happen.
So you kind of touch on 2026 a little bit, or, we just did a little bit, but what are you, in terms of going forward here, what are your, I just saw some announcements you guys had with some exchange traded products, it looks like, stuff like that. What do you see just in the ETF, ETP landscape, what you guys are doing, just kind of in general, broad brush, like what do you see moving forward?
Yeah. So we're going to be launching a lot more exchange traded products. Obviously investors love them. We've had huge flows into our Bitcoin product, huge flows into our Ethereum product. You can expect additional single asset products from us. Maybe the product I'm most excited, we're trying to turn our index fund into an ETP. We need the SEC's blessing for that. That would be a broad-based, diversified exposure to crypto. I think that's going to appeal to a lot of investors if and when we can get that over the hump. We need the government to reopen in order to do that. So stay tuned, but we'll see. But the biggest thing we're going to continue to do is just what we've been doing for the last few years, which is, we do 15,000 meetings a year with financial professionals to talk about crypto, to educate them on what's going on, to give them our views on what's going to happen. And we're going to just continue to do that. Over time, that brings more and more people into the ecosystem. So yes, more products, very excited about the index product, but mostly just persistent education on this asset class. Because if you learn about it, you tend to invest. That's been our experience over the last 8 years of doing this.
I want to go back to what we were talking about earlier, just with the gold stuff, and just BRICS and China, Russia, and what's going on here. Obviously, Taiwan. There's so many different angles to this. It feels like, to me, and it's something I've been thinking about for a little while. And then I saw Jack Muller's Monday show he does, and he really kind of really pressed into this, which I found interesting, and probably because it was something on my mind. So it was kind of one of those things where it's like, confirmation bias type of thing, but it really just was the side of, and Saylor had even said this a few years ago too, of, I think half serious, but half joking, but half serious, of, hey, why don't you demonetize gold? Like you could, we could, just, sell all our gold if we have it, sell it, and then, buy Bitcoin with it. And it's a physical thing you can always get back if you needed to, worst case scenario type of thing, which would not be great. But what do you think when it feels like things are just kind of lining up on, people are taking their sides of the aisle, picking their sides of the aisle. They're betting BRICS over here with this legacy, the physical world, and then, like we said, this digital world on the other side. Is that, is that what you see as well? Because it feels like that is the fight at the end of the day.
I love that. I mean, it's an interesting proposal. My gut tells me is that you're going to end up with both sides owning both. And I think the
Yeah.
rational bet is to have a foot in both camps.
Yeah.
And I think the sort of I understand the very aggressive game theory that would suggest that the U.S. should sell its gold reserves, but against that is sort of the practical. This is a last stop, bulwark against this other
Mm.
world, and I think probably the right answer is both, and I think you're going to see that on the other side of the spectrum as well. I suspect you'll see the gold first sort of central banks adding Bitcoin exposure over time. I think the right answer to that problem is actually to own both assets, and from a geopolitical perspective. And so I suspect that they'll do that slowly, but over time.
What I want to transition a little bit. What are your thoughts on just the treasuries, their treasury companies, and just kind of what's going on in there? Obviously, if Bitcoin price isn't going up, it's not going to be a super fun time for Bitcoin treasury companies and what's in that market. So what do you see in that world? What are you hearing? What is your prognostication, I guess, going forward when you kind of look out across the horizon?
Yeah, I think it's going to get very interesting on the digital asset treasury side. My view is they've been sort of treated as one class. You're like a Bitcoin treasury company. And I suspect what we're going to see is a lot more differentiation. My own view is that Bitcoin treasury companies should only trade at a premium to their Bitcoin if they're doing something exceptionally hard. If all they're doing is buying Bitcoin and putting it in a box, then my ETF does a better job than that of them because it's liquid and you can always get out at NAV. So if that's all they're doing, they should trade at a discount. But if they're taking that Bitcoin and they're generating a yield on it, or they're taking that Bitcoin and they're doing option overlay strategies, or they have a $70 billion balance sheet like MicroStrategy, and they're offering convertible loans, which is something I can't do. Well, then those can add value. And for that, they can trade at a premium. What this means is I suspect you'll see some that are doing hard things trade at premiums, and some that aren't doing hard things trade at a discount. And I think an investor, as you approach these, the question to ask is, how hard is it what this company is doing? If it's hard, then maybe. If it's easy, then no. And I think investors will start to make that sort of differentiation.
Do you guys have any updates on the like the like kind redemptions, things like that? What's the kind of the word? Is that in one of those acts, the Genius or Clarity Act? Like, how is that? What's all going on with that?
Yeah, great question. So at an institutional level, in other words, when we interact with the largest institutions in the trading side, they can now do in-kind creations and redemptions of our Bitcoin ETF. So they can send us Bitcoin and we send them out Bitcoin. And that's great. That makes the ETF more efficient. It makes it more tax efficient. It means if you're a large individual holder, like a mega whale of Bitcoin, and you want to turn it into an ETF, you can probably do that in a tax efficient manner. What we can't yet do, and I would love to do someday, is allow individual investors to redeem Bitcoin out of an ETF. I don't think that's impossible, with quotes around the word impossible, but I think it's very hard. And right now it's not allowed, but we will continue to push for that. So it's happening at an institutional level. It's not happening at a retail investor level yet, but I would love to make it happen if we could.
So we touched on, obviously, like short-term price, stuff like that. I have a couple, want to get your thoughts on some longer term things a little bit. What you had said something a number of months ago of just kind of how you see a price, not being determined, but kind of the current price of Bitcoin and kind of how we get there. And I think my question was something like, hey, are you an M2 person? In your mind, kind of where does the price of Bitcoin in essence come from? A long story short. And you had kind of said, you look at it as a spider web, and just all these different factors. So I love you to kind of explain that. For anyone that missed that last time, I thought it was one of the better analogies or better ways, just a visual representation of people kind of seeing how how we determine a price of Bitcoin.
Yeah, thank you for that. Yeah, I think about all the different markets Bitcoin is going after, like all the places where Bitcoin can compete. As an example, it can compete with gold. It can be a digital form of gold, a way of storing value in a digital format versus a physical format, as we discussed. And that's a $25 trillion market. It can be a store of offshore wealth in the same way that like London or Vancouver real estate is a store of offshore wealth. It can be used in a currency format in the way that El Salvador is experimenting with it. It can be used for bulk international transaction settlement. Like I think, for instance, we will likely see in the next handful of years companies or countries trading oil denominated in Bitcoin. It can be used in an institutional setting as a diversification tool. The way I arrive at a valuation of Bitcoin is I ask myself, for instance, over the next 10 years, what percentage of the gold market do I think Bitcoin will take? What percentage of the offshore market? What percentage of this currency market? What percentage of these other markets? And then I add those up and divide by 21 million, and you get a price target. We actually recently published a paper on this, doing it for the next 10 years. And where we arrived at a very conservative, I think, basis was at a $1.3 million price target by 2035. Now, my personal view is it'll actually exceed that. But to put that $1.3 million in context, all Bitcoin needs to do to get to $1.3 million within the next decade is take roughly 25% of the gold market. It's 10% now. It needs to go to 25. And the reason for that is that that market is expanding over time. So a lot of people think like Bitcoin has to match gold to be worth $1 million. Not true, because the gold market has been expanding like 7% a year for the last 15 years if you average it out. If it continues that, it needs to take about a quarter of the market over the next 10 years. Add the other pieces up and you get to $1.3 million. One of the reasons I love Bitcoin so much is you get to make that investment on this digital gold thesis and you get everything else for free. Like if it becomes an international currency, an international means of settlement, those are like free options that you get on top of this core store value thesis. I think when you do this, when you break it down into the various pieces, it's hard not to arrive at a very significant price target, which is why even traditional Wall Street has price targets of like $500,000 or $1 million or $3 million, which is you don't see Wall Street putting those sorts of price targets on many assets, but they do on Bitcoin, because if you do the underlying analysis, that's where you end up.
Yeah, and that's just maybe think of Saylor in general. I mean, what are your thoughts on just his I guess the 10-year thesis of the gold rush? We've talked a lot about gold, obviously, so kind of apropos in a way, just gold, Bitcoin, everything over the next 10 years or so. Do you see like his, what is his bull bear base case of, what is it, 3 million, 13, or if there was 13, I don't know if he upped it to 21 now, and then 42 million. Is that, and I think that the important part too is those are in today's dollars. Those are, that's
Right.
a world where those are in today's dollars. People are like, well, of course it's going to be there. Well, no, that's in today's dollars. It might be 50 million or 100 million or 200 million at that point, but today's purchasing power. So is that, I guess your own thesis, like how does yours stack up to like what's the Saylor outline, I guess?
Yeah, I think he's like a maximal thesis, so I hope that he's right. I think he makes a lot of good points. It's definitely a bigger target than we are. I think what you find with our price target is it's roughly aligned with what you hear from Alliance Bernstein. It's roughly aligned from what you hear from Standard Chartered. It's roughly aligned even from what you hear of from Kathy at ARC. She's a little bit higher. It's aligned with what Van Eck is thinking. I think what that tells you is sort of the institutional conservative approach to this ends up with a price target around that level, around, what we came up with, which was 1.3 million by 2035. It's not a guarantee that we'll get there. There's certainly worlds where Bitcoin dramatically underperforms. I recognize it's a very aggressive target, but it's consensus actually. And what Saylor is the optimistic side of that, which has a significantly higher price target. Look, he definitely could be right, but he is more optimistic than we are in our official capacity.
Yeah, and it's funny. I mean, I go back to really over the last year or so. It's really, for me, a lot of this just comes down to the story you tell yourself, right? And it's the Overton window shifters of, hey, if you think Bitcoin's going to be money someday and it's going to be worth this much, and the number of people think that, then it's going to be that. And people are like, well, government's going to stop Bitcoin. It's like, well, if that's a story you tell yourself, then yeah, government will stop Bitcoin. Like you, whatever, I forget the old poem, but it's like, if you think you can, you can. If you think you can't, you won't. So it's fascinating to me. It's a mindset, really almost more than anything of what it will be. So, truly fascinating.
I think that's right. And as an investor, even if you're just uncertain, if you think it might, you probably want some exposure to it, right? Because you want to have that hedge in case it is. So only if you're 100% certain that it won't does it make sense to be at zero.
Yeah. And in saying that, again, kind of coming back to the gold, thesis in a way. And again, I was 15 years ago, the gold guy and silver guy for a while. So I empathize with that world, but it is interesting. There are a lot of the gold, silver, pundits, on Twitter or whatever it is, talking a lot about Bitcoin these days, even though they're at all-time highs, which is really kind of maybe some signal or a lesson in there of, knowing, hey, we're in a dead end, at the end of the road here. There's not much more you can do. I mean, for 5,000 years, it always reverted back to paper and things collapsing, because the beauty of gold and silver is that's physical, but it's also its limitation, right? So it's like, it's this weird dynamic. So yeah, boy, that's a whole different rabbit hole we go down. What are your thoughts on the JP Morgan announcement of, using collateral? Obviously, Jamie Dimon, for 10 years saying, oh, we're not going to do this. We're not going to do this. And, and then, here we are, the inevitable, it feels like. What are your thoughts on their announcement?
Yeah, I think it's inevitable, right? The old saying, you overestimate what can change in a year and underestimate it in 10. I think it's the direction of travel. Look, Bitcoin, crypto, Wall Street are now aligned. It's no longer outside of the system entirely. It's now owned by many of the largest institutions. Every major Wall Street firm is building in this space. It's going to be accepted broadly as collateral. It's going to be traded alongside the S&P 500. It's going to be held in the same assets. It's going to be custodied by the same people. It's no longer going to be othered the way it was for the first 15 years. I think you're going to see more of these announcements, and then you're going to see the announcements of JP Morgan adding it to model portfolios. You're going to see the announcements of them offering trading and custody. You're going to see them launching their stablecoins. It just goes to show you that we are firmly moving into the mainstream. If even they feel enough commercial demand to make this change, given all that they've said negatively about Bitcoin, think about what that says of the level of commercial anticipation for this. It's really remarkable. So, it's worth noting here in Bitcoin land, almost everyone's a convert. Michael Saylor was a Bitcoin skeptic in 2012. So we won't hold it against JP Morgan. They are welcome into the tent. The water is warm. It's great to have them.
I love it. So in saying that, and you and I touched on this a few months ago in a way, Jeff Booth, I just released an episode with Jeff Booth, and we were just talking about this very thing of realizing that, Bitcoin, the discovery of Bitcoin was, the beauty of it was that it was a system that was trustless, permissionless, outside of the system. And in saying that, right, if it stays decentralized and secure, it's, everyone needs Bitcoin. So, how do you square that circle of, hey, we're trying to keep it pure. We're trying to keep this thing where humans can interact without interference of the man, and just have a free market versus, oh, hey, it's just an asset inside this old system. And it just gets, well, again, going back to mindset, if people believe that's just another asset, just like everything else, and it's not money, and it can be both. And that's where I liken it to like America. I think it was Nolan Bowerly or somebody who said like America, and certain people have talked about this over years. America itself is both a revolutionary force or revolutionary country and also an empire, and it can be both, and it can oscillate between both worlds, actually, where a lot of countries can't, right? So Bitcoin can be money, and it can be an investment, it's a protocol, it's an asset, like it can be all these things, so it's like it's wild thing. So anyway, my whole point, without going too far down this road, is how do you see that kind of playing out? Is it the global monetary network 10, 20, 50 years from now? We've been kind of circling around this, where it is this thing that's grown now, kind of broken free from this world that we all grew up in, this legacy world, where I feel like, what you guys do, and so many bringing Bitcoin to people, and people are learning about it now, that eventually it does kind of outgrow all that. And in this demographic shift, we're kind of coming here to like the end, the last, part of the fireworks show here, if you will, where it's like all this is wonderful and what we've been doing for years in the next couple of decades, but does it outgrow all that and become something on its own? So, I mean, where do you see all that? I know it's a big question, but
Yeah, it's a big question. I mean, I guess it's a great question. The first thing I would say is there's nothing about interacting with Bitcoin through the traditional financial system that makes it any less capable of offering you the ability to directly interact with it on a self-sovereign basis.
mm-hmm.
So people wonder, like, is it bad that they're Bitcoin ETFs? No, you said the word free market. Bitcoin
Mm-hmm.
ETFs mean that you can access Bitcoin in an ETF in a traditional financial wrapper, or you can access it on your ledger and do it
Remarkable.
directly yourself.
Yeah.
And that's just a matter of choice. And as long
Yep.
as the growth of ETFs doesn't impair this other piece of Bitcoin, its fundamental nature, then it's just strictly positive. And it's worth noting that many people who come into the market through things like ETFs will eventually decide that they want to own some Bitcoin directly on their own wallet, and they will, right? So this is actually strongly additive to the system. In terms of where it goes long term, I just think it's like I think the direction of travel is being a critical part of the global financial infrastructure. The degree to which it is the core of it depends on how fiat systems evolve and how other things evolve. And I think that's sort of unknowable, right? We
Mm-hmm.
can't be certain in a short time window what we'll see from traditional fiat systems or from Bitcoin itself. But what I think we feel confident in is it will be available globally. Everyone will feel comfortable accessing it. It will be liquid in every market around the world. And it will therefore be used in very interesting ways, maybe some commercial payments ways, maybe some international payments, maybe just investment, but it will have a seat at the table. It will not be sort of cast out of that lot. And if you believe, as I do, that it has many different applications, you think once it has a seat at the table, those applications will be used many times over. So I think it's a positive long-term direction of travel.
Yeah, absolutely. I could not agree more. What is there anything out there that's really intriguing you in terms of things that are being built on the network with the network? There's obviously so many things, like whether it's mining and flared gas, and again, just the whole FUD of like, oh, Bitcoin's boiling the oceans, and it's like it's actually inverse of that, right? Like it's like this paradox that people go through where it's like, well, I thought it was this, and it's like, no, it's actually completely opposite of that. Is there anything out there like that where different discoveries or things that people are working on that have intrigued you or kind of interesting to you right now?
Yeah, I mean, I love that example. I do think it's a spur for renewable energy development in a
Mm-hmm.
really interesting way. That's really concretely positive. I like to see people experimenting with the different things you can do with the Bitcoin network. Everyone liked to see what people are doing on Lightning. I
Yeah.
even think the sort of DeFi on Bitcoin experiments, whether they become part of the network or not, are
Mm-hmm.
interesting to see. I'm very excited about something you touched on, which is that this Bitcoin is pristine collateral. I think that has many use cases, and therefore lending and borrowing against it is a big growth area that I find very interesting. But mostly what I see is it breaking down the walls between Bitcoin and the rest of the world. And that's a slow process, but it's a very exciting process, and I'm here for it.
I love it. Do you have? I have just a couple more for you here that
Yeah.
are kind of related. Um, do you guys have? I was going to ask you about lending. Just your thoughts on just lending in general. Obviously, there's more and more platforms coming out with lending. There's Horizon. There's CJ Constantinos. I forget. There's a lot, all kinds of Bitcoin lending products, home Bitcoin lending products, and taking your equity out, stuff like that. So it's getting very interesting in that world. To your point, so any thoughts or anything you see in that world that's really interesting to you specifically, and also what you guys are doing? Are there ways to lend against? And again, this is advanced stuff. It's not financial advice and stuff like that, but
Yeah.
the products you guys have is there anything that is available that people can do to leverage Bitcoin?
Yeah, for sure. We work with a lot of large Bitcoin investors on an SMA, which means a separately managed account basis, to do option overlay strategies against their Bitcoin to help them generate income that they can live on while still holding their Bitcoin for the long term. So that's probably the closest we get to it.
Yeah.
I'm intrigued by all the lending and yield protocols on Bitcoin because, from a product development perspective, if I could offer a Bitcoin fund that had a 1 or 2 or 3% yield, I think people would be very intrigued by that. We haven't been able to do that yet because we haven't been comfortable with the institutional nature of those platforms. But as those platforms mature, and as lending, et cetera, matures, it's a space that we plan to play in. Look, there's $2.5 trillion of Bitcoin wealth in the world. To say something obvious, that's a large pool of assets to lend and borrow against. There's a huge TAM there, that's many orders of magnitude bigger than most other crypto assets alone, right? Even if 10% of that is lent and borrowed, that's bigger than every other crypto asset except for Ethereum. So it's a huge potential market. So it's something we think about a lot. But the closest we get to it right now is doing option overlay strategies, which is sort of a classic asset management technique to generate income against an asset you want to hold.
Yeah, it's super interesting. And again, I know the average person's not going to do it. I can hear people yelling at me right now, like, just hold Bitcoin. And that is their return. That is your 3%, 10%, 20%. And yes, it's a point taken. I can hear people yelling through their thing. So, but in saying that, again, this is where, and you and I might have talked about this a few months ago. It's this marrying of the worlds of not everyone is the same. Everyone comes from different places. Everyone is starting from these different places. And the products you guys have, everyone has their time and place for a reason. And this is like the PSA of everyone's going to come into Bitcoin through a different wrapper, through a different lens, through a different vehicle, whatever it might be. And so, what you guys do is very important because it is the first foray for a lot of people, the people that have the wealth, the older generations. How do you get in and start learning about Bitcoin? So again, it is very important that we have all these angles. So that is the PSA.
It. Yeah, absolutely. I appreciate it.
Absolutely. In saying all that, the last thing I have for you is what are your thoughts on just the global? So really bringing all of this together, the global end game, putting a number on it, I guess, so to say. And again, I maybe it's on my mind too, just because I talked to Jeff Booth about this, and it's not, well, I mean, it's quadrillion now. It was 900 trillion. Now it's 1 quadrillion for all assets in the world. And his thought is it has to account for every single dollar in the world. Bitcoin is money. Then you have a Jack Mallers, hey, it's 1/2 every trade. So it's, 450 to 500 trillion is the end game for Bitcoin. That's kind of its TAM, like you just mentioned. We talked about the gold market, 20 to 30 trillion right now. Where do you see Bitcoin's, it could be 100 years from now, 1,000 years from now? Like, what is that end game truly for the accounting Bitcoin is going to do? Where does that kind of stop in your mind?
Oh man, that's an awesome question. Those guys have better answers than I do. They really do. Look. I think I don't have a specific number. What I do have is some trends, and the trends I see are Bitcoin gaining value against all other assets. That's been true for 15 years. I think it will be true for another 150. The other trend I see is every government around the world printing more money and building more debt. I don't see what reverses either of those trends until we get to everyone knowing, accepting Bitcoin, right? It's like it's in an information penetration state, and every year more and more people know about it, and more people have accepted it as part of the world state. That seems like that has many years to run. And this other trend of infinite debt and money printing, I just haven't seen an optimistic, realistic view that reverses course. And if both of those just keep going up and to the right, the combination leads to a very, very high number. So I wish I could throw out. I don't even know how big a quadrillion is, but it sounds very big. But I wish I could throw out a number that large. But mostly, I just see this as the inevitability. There's an old saying about venture capital, which is, the experts in venture capital don't worry about the valuation of a Series A investment. Is it 20 million? Is it 30 million? Is it 10 million? Who cares? It's either worth zero or it's worth $1 billion. And if it's worth $1 billion, all you care is you made the investment, whether it was 10 or 20 or 30. If it's worth zero, you lost all your money anyway. And I think that's true with something like Bitcoin. Look, I have every confidence it's going to be worth a lot. And I don't know what a lot is, but I know that it's a lot. And so I think at 115,000 or whatever it's trading at today, is that a $10 million Series A or a 20 million? I don't know. But it seems like I have enough space to be wrong and still make a lot of money. So I like that.
That's such an incredible point. It reminds me of 15 years ago, the Hal Finney Bitcoin Talk Forum, email.
Yep.
Like, this is either worth $10 million or it's worth zero, right? Like it's binary. Again, coming back to the binary of it's either one or the other. So I love
That's right.
I love that. I love that we wrapped on that. That's such a brilliant point and a great way to end all this. Where can people find you, Matt? Thank you so much for your time. And anything else to mention that we didn't cover that you want to?
No, this has been really great. You can find me on X at Matt_Hougan. I have a weird U in my name, Hougan. So don't look for the fake Matt Hougan with no U. Or bitwiseinvestments.com. I write a weekly memo called the CIO memo. You can search for it and sign up for it. And the best thing is, it's the only thing we send you. We don't spam you with other stuff. You just get the investment memo. So check me out there.
Amazing stuff. Thank you so much, Matt. Always a pleasure hearing your thoughts. You're very, very nuanced, articulate, well-spoken. And I just, I thank you so much because you're a great ambassador for the legacy world and the revolutionary Bitcoin world, we'll call it. So thank you.
Happy to be a bridge. Thanks for having me. This has been fun.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.